Hey, welcome to Grant's Interest Rate Observer of the Air. I am Jim Grant, and to my left, as always, is Eric Whitehead. He's the controls. And at the other end of the telephone line, which stretches all the way to Baltimore, Maryland, to North Charles Street in Baltimore, Maryland, is my friend Porter Stansberry. Porter, welcome.
Thanks so much for having me. It's a tremendous honor.
Well, it is a privilege as far as I'm concerned as well. You know, Grant's listeners, you know Porter, even if you don't personally know Porter. For one thing, he is a paid-up subscriber of this publication, and we are paid-up subscribers of some of his, too, so it's like reciprocal, right? But beyond that, Porter is, I think, about the most successful publisher of financial periodicals. Some people kind of condescendingly call them newsletters, but Porter has built a very wonderful, large-scale business in Baltimore called Stansberry Research. And he started it in 1999. He's the founder and editor of Stansberry's Investment Advisory at Stansberry Research, LLC. And he co-edits and edits other publications under that umbrella as well. I guess he's got more than a dozen of these operations cooking at the same time. And anyway, I've been to see him at his place of business, and it is, let me just say, it does not resemble this place, which consists of 3 or 4 guys sitting around typing and a couple of people doing purposeful work and circulate. I mean, he has got industrial scale. So Porter, again, welcome.
Thank you very much.
I would like to begin, Porter, by asking you, as someone who does marketing in a scale that has astounded me the more I've come to know about it, how do you see the American public and what it wants to do in money? What do people want to do, and what do people think they have to do, and what are they afraid of doing?
Well, it's a great question, and we do know a little bit about that. One of the things that I learned very early on is that surveys don't work very well. People taking surveys tend to tell you what they think you want to hear as opposed to what they really believe. And you find out what they really believe by what they're willing to buy.
Ah, yes.
We spend about $40 million a year marketing financial periodicals. As you say, some people call them
Yeah, all right. We're not going to stoop to that designation. Go on.
And we sell something on the order of 250,000 to 500,000 subscriptions a year. So we have a pretty good base of knowledge about what people are interested in, and I can describe it to you this year with one word, which is Bitcoin.
I've heard of that, but Porter, let me interrupt. I want to set the scene a little bit, Porter. So last night, today around 5 o'clock, I got email from Evan who said Bitcoin. I think we'd last seen it at $12,000 an ounce. No, per unit, whatever they say. Okay, a pound. What do they sell Bitcoin per pound? No, per unit. Okay, so Evan says
per
right. So Evan says it was $12,000 when you left. Now it's $14,000. Says, that's a nice round up tick. And then it's $15,000. And I say facetiously, Evan, send me an update at 3 in the morning. And I've forgotten what time an update did come in, but as we're speaking, I think it is $17,000. Now this is going to date this podcast. I should have said $27,000 because we have a shot of being timely if it came out late this afternoon. Okay, that sets the scene. So the word, Porter, you said was Bitcoin. Do tell.
So it's been very difficult this year to sell any kind of financial periodical that did not address Bitcoin directly. So everything we have sold this year has had to use Bitcoin in one form or another. So, for example, we were selling newsletters for some time by talking about gold as better than Bitcoin.
I wouldn't do that, Porter, if I were you. No.
Yeah, I know it's dangerous, but let me tell you something else that's dangerous, Jim, which is that there's a reason why the magazine cover indicator works. I'm sure the listeners know what that is. There's a paradox in our business, which is that to appeal to people who need our publications, we have to give them the gruel that they're looking for. And then once they get in our door, we have to try to show them gently that what they thought they were interested in is going to bankrupt them. And instead, they should be doing something a little bit more sensible. So we unfortunately, we're forced to use the marketing that works. And this year, that marketing has been Bitcoin. But I hope that you recognize that we are in the camp of people who believe that blockchain technology is extremely important and is going to be here for a very long time and be very important to people, but that the price of Bitcoin makes no sense, that there's no fundamental way to value it, and that this is, of course, a speculative bubble in the midst of growing, and no one knows where it will end, but we do know how it will end, and that's bad.
Porter, you started your business in 1999, which, of course, is a year not unlike this one in some respects. Some of the charts prevalent in 1999 1999 bore or anticipated the purely vertical configuration we see in Bitcoin today. Can you compare and contrast the market environment, or as they say up at Columbia University here in New York City, the zeitgeist prevailing in 1999 with that today, specifically with regard to Bitcoin?
Yes, Jim, it's extremely reminiscent. The difference is 20 years ago, I was 25 and not 45. And I didn't really have anything to speak of in terms of assets or knowledge or wisdom. So it was much easier for me then to imagine a future where Amazon would put Sears out of business and Adobe would put Kodak out of business.
Those are crazy ideas, Porter.
I know, and they happened to be right. But trust me, it was just dumb luck. So I got my start in financial periodicals by writing about technology. I had grown up using computers. I programmed computers. I had been using the internet since 1991. For me, I was very a part of all of this, and it made sense to me. And I got paid a lot of money to explain it to folks who were older and richer than I was. and I was right in large measure, and I was also smart enough to get off the train when it started to collapse, unlike a lot of my peers, and most famously, as you know, George Gilder, who got crushed by it all.
Yeah. Well, George Gilder, in justice to George, he is, and remains one of the shining lights of our line of work. He did get.
I agree completely. I just meant that George decided to buy out his partners in March of 2000, which was a crushing decision.
Yes, it was.
And I was just lucky enough not to suffer the consequences of being so deeply involved.
Well, you know, there's a kind of sixth sense that successful investors and successful people who work around the financial markets, and I think that one of the defining traits of that success is an appreciation of the paradox of things, as you mentioned in the very first word you spoke on this broadcast. You know, so let us go back into how you market, because you told me, and you've shown me, Porter, that it's better to market than not to market. Now I've absorbed that lesson as a businessman. But before that, this podcast is brought to you in part by Morty, M-O-R-T-Y, the newest and smartest way to get a home mortgage. So you know that getting a mortgage can be a long, confusing, harrowing, expensive, hidden fees, strange terms, endless calls, lawyers too. Well, now it's easier. So Morty can save you time and money. Here's the way it works. So you enter information into Morty's secure website, and you'll immediately see the mortgage options you qualify for with real rates from different lenders. They even show you the hidden fees up front, so you can confidently compare options and select the one that's best for you. So if you get stuck, no problem. Morty has best-in-class customer service support. So whether you're a first-time home buyer looking to refinance or buying an investment property, head over to trymorty.com/grant to get started today. That's TRYMORTY, trymorty.com/grant. Morty Inc. is a licensed mortgage broker, equal housing lender, number 1429243. So tell us how you make the pitch to people using Bitcoin as a kind of a shiny, glittering stone on the beach, and how you help them perhaps to wean themselves off of Bitcoin once they begin reading your stuff. Take us through some examples.
Jim, I'd really like to, but I got to tell you, and I will tell you exactly how we did it in regards to Bitcoin, but it really comes down to a very simple philosophy that I know that you understand and respect, and it's really very simple. We do the homework that investors should always do on their own, and we give people the information that we know they need, even if they're not experienced enough to know they need it. And so when it came to Bitcoin, the most successful ICO going on in the world is for something called EOS. And EOS is a new design of a blockchain software. The tokens are being sold on a daily basis. They're being auctioned off over the course of a year. And so far they've raised, I think the latest tally is $600 million. And this money is going to be used to develop a blockchain technology that can compete with, among other things, with Facebook. The entrepreneur who is behind this is a young man who lives in Hong Kong, and he is friendly with one of our partners over there, Thomas Churchhouse, who is the son of Peter Churchhouse. Peter Churchhouse for a long time ran Morgan Stanley's business in Asia. And so what we did was very simple. We decided that we would explain how blockchain works through the example of EOS, and we hosted Tama and his partner who's behind EOS at our firm here in Baltimore, and we advertised that we were going to explain the basics of cryptocurrencies, explain in detail how the EOS offering works, and offer folks investment advice surrounding which cryptocurrencies to buy and why. And so we did our best to demonstrate our real, true expertise in the space, to demonstrate that we have a network of people that know us and know the space very well. And then we worked hard to get the information that we would want if our roles were reversed. And I think that the more you do that in this business, the more successful you become. The dangerous thing is a lot of people are going to knock us off. A lot of people are going to say and claim that they have expertise in this space or any other space. A lot of people are going to claim that they know X, Y, and Z. And, a lot of people are going to put out a lot of bad advice, and you see that as well. And look, the history of the newsletter business is replete with people who were little more than con artists, who promised everyone the sun and the moon, the stars, delivered very little. And I don't think you could have done what we did at Stansberry Research if you didn't consistently put your subscribers first.
Right. So
that's really what we do again and again and again.
So, Porter, the people who sign up for your publications based upon their interest in Bitcoin, that you let them know that you too are interested, and you too have, well, more than that, you're not just interested, but you have done the aforementioned work. Okay, so they start reading you, and they begin to see that you are not, in fact, as captivated by this idea as perhaps they are. So, if I may ask a kind of an almost impertinent business question, do these people stick around? Do they cancel? I mean, how do you deal with the friction between what you think they should be reading and the ideas and the opportunities they perhaps ought to be pursuing on the one hand versus their fascination, perhaps their self-destructive fascination with crypto schmipto on the other hand?
Well, I think you have to be very honest with them in the marketing materials before they have paid you a penny. So just to explain, the pitch that we made to get people to tune into the webinar was, come learn all about crypto for free from people who really know what they're talking about. Thomas Churchhouse has been investing in Bitcoin since 2012, and Brendan Bloomer is running EOS, which is the most successful ICO to date. So people wanted to hear from those folks, so they tuned in. And then the pitch that they got was, first of all, we gave them a lot of education. We proved our expertise by giving them 2 hours worth of information that's very useful and that could help them set up their first wallet and open an account at a crypto exchange if that's what they wanted to do. And then we told them that Thomas' approach to investing in cryptos, this is exactly how it works. And of course, what it boils down to, Jim, is that you're not going to put all your eggs in one basket. You're going to diversify, and you're not going to put all your money in crypto. And that's what we preach, and that's what we fulfill. But they're not surprised by that once they begin to get the program.
So on to the next one, which is this episode of Grant's Interest Rate Observer of the Air is brought to you by eFinancial Careers, the world's leading financial services career website. Discover career-changing opportunities across the industry, from leading brands to niche firms. Why not take the hard work out of job hunting? Register today to let recruiters find you. Create a profile, create alerts, upload your resume and cover letter to apply for jobs quickly. So check out the site at efinancialcareers.com. That is efinancialcareers.com. So Porter, in the publications that you yourself oversee and in some cases edit, what's the opportunity set? What do you see that is appealing, that is value-laden in this kind of picked-over marketplace? You do work on debt. You do work on distressed debt, of course, equities. What's there to talk about and to pursue?
Well, the financial markets, as you know, is just a continuing drama. It's a never-ending soap opera. So there are always firms that are on the rise and always firms that are on the fall, and we do our best to find which one is which. About the paradox of finance, before I get to the current opportunities, I really like the opportunity to tell you one classic example of the paradox of finance, though, because Bitcoin isn't yet as paradoxical as I believe it will become. But fear and greed never go out of style. And I'm sure you recall in the fall of 2015, there was a tremendous sudden increase in fear in the fixed income markets, particularly in low-quality corporate debt. And the spread between junk bonds and investment-grade stuff went to 10 percentage points or 1,000 basis points. Do you remember that?
Yeah, I think perhaps January 2016 more so than the fall of 15. Yes, but it started in the fall. Right, correct.
So I said the fall because I started writing about how this was going to happen in October or November. I was expecting a correction in fixed income markets because of X, Y, and Z. Remember when Third Avenue Value had to stop redemptions from their funds? Yep. So there were all kinds of signs of trouble brewing. And so we sent out messages to thousands and thousands of people saying there's going to be a huge crisis in corporate fixed income, and we can show you how to make a lot of money on it. When they signed up and they joined us on the webinar and they began to get our marketing materials sales, what they learned, much to their surprise, was that our idea was that when the spread begins to widen, you should buy fixed income because, as you know, there's no such thing as a bad bond. There's only a bad price. And so we wanted to use the correction in the fixed income markets to buy lots of bonds that we believe will be money good when they had a yield to maturity of 12 or 14 or 16 or 18%. And so the people responded to our advertising thinking that we were predicting the end of the world, when in fact what we were really doing was trying to position them to make good money in fixed income. And happily, it worked out. So that was a situation where we were right, and where the subscribers, sort of almost in spite of themselves, have got a terrific benefit out of it. We've actually taught lots of individual investors how to buy individual corporate bonds successfully. And so I'm really proud of that example. And that's how we use the paradox of finance. I really haven't been able to find a way to do that in Bitcoin yet because there's not enough of a market, there's not enough of a history there to figure out how to play it in a contrarian way smartly. I don't think you can short Bitcoin today, and I don't think that you should because its rise is just too hyperbolic. So I hope that is a better description of what we try to do for our subscribers.
Yeah, very good indeed. So what are you doing for your subscribers next, Porter?
Well, Jim, there are a tremendous number of dead-in-the-water corporations that have way too much money in debt. One example of a company we've been shorting is Sprint, and we weren't scared off by the rumors that it was going to merge with Deutsche Telekom because we didn't think anyone wanted a $31 billion pile of debt that hadn't made any cash flow in over 10 years. We were right. So we're looking for companies where the artificially low interest rates have led corporate management teams to just pile up huge mountains of debt that may be attractive because of their low interest rate, but really can have no hope of ever being repaid because of the resulting overcapacity in their markets. So when Verizon offers unlimited data for $30 a month, how does Sprint compete? Right. And the answer is they can't. And there's lots of that kind of overcapacity that exists after a tremendous 10-year rally in corporate credit.
Yes, indeed.
So we're looking for we're looking for situations like that where there's no competitive differences, there's no sustainable advantage, and there's tremendous overcapacity on the short side. And on the long side, we're looking for companies that simply are able to do simple things a lot better. So there's a lot of this going around right now. Grocery stores that have figured out how to do delivery well. Companies like Grubhub that are figured out how to bring restaurants to you. There's a lot of companies that are able to use these kinds of technologies well and that are growing their business.
Porter, if I hear you correctly,
Sorry, one last thing. And then the final thing is we really specialize in what we call capital-efficient companies. And this won't surprise you at all, Jim. You know finance very well. But companies like McDonald's, people think that McDonald's is a restaurant business, and it's not. McDonald's is a real estate and royalty business, and it is an incredibly great business. And so we try to get people to invest in these kinds of companies like Hershey's, like McDonald's, that are gonna survive and thrive in virtually any macro environment.
So, Porter, if I understand you correctly, what you're doing at Stansberry Research is looking for overpriced securities that should go down and undervalued securities that should go up. Is that it?
No, I would tell you surprisingly that we don't pay as much attention to price as other people do. We have just found that most bad businesses that are failing are going to have a low price from the start.
Right. It's a Garpy guy.
And most quality businesses that are growing and that are going to produce a lot of wealth are fairly valued from the beginning. So, we bought McDonald's at 10 times its free cash flow. And if you look over the history of the company, 40, 60 years as a publicly traded stock, you're going to find that's where it trades most often at. So we didn't buy McDonald's when it was a bargain, but we bought McDonald's when it was at a fair price, and we've done very well.
Yeah, it sounds sound is what it sounds. So, Porter, it has been a privilege and a delight. Great to talk to you. Thanks for coming on Grant's Interest Rate Observer of the Air, and I look forward to seeing you, maybe come to the next Grants Conference. Porter is a regular at the Grants Conference, which tones the joint up considerably. So, Porter, until the next time, thank you once more.
Jim, you're welcome. I will, of course, be in the front row as usual at your next conference, and I admire you and your business tremendously, and again, thank you for having me.
Thanks for being with us, Porter. So long.